Students, today we are going to learn our third chapter of corporate taxation, assessment of companies. I am M.S.Altamash, Assistant Professor in HOD Management Department, SSBES'S ITM Nanded. First we will see what do we mean by company. A company is an artificial person created by law having a distinct entity and a perpetual succession and a common seal. Now, what do you mean by artificial person? Artificial person means a legal person created as per law. Example, a firm, company or trust. It simply means the company can purchase and sell property in its name. Created by law, it means it is created as per Companies Act 2013 or previous Companies Act 1956, 1913 or 1882. Distinct entity. It means a business has its own existence apart from the people who own or work in it. Perpetual succession. It means continuation. The company's business is not affected by the member's death or resignation. Common seal. As it is an artificial person, it has to sign the documents, so it signs its document through its common seal, that is official seal. Examples of companies are Reliance, Bata, Tata, Hindustan Unilever Limited, etc. Now, as per the Income Tax Act 1961, the definition of company is any Indian company, any body corporate incorporated under the law of a foreign country. It means a foreign company. Example is Amazon is an American company doing business all over the world, but it does its business in India also. Any institution, association or body which was assessable or was assessed as a company for any assessment year up to 1970-71. Any institution, association or body, whether incorporated or not and whether Indian or non-Indian, which is declared by general or special order of the Central Board of Direct Taxes to be a company. Types of companies. There are various types of companies as per Income Tax Act. We will see those companies. First is company in which public are substantially interested. It means it is a company owned by government or RBI. Example of the companies in which public are substantially interested are Indian Oil Corporation Limited, GAIL India Limited, SAIL India Limited. These are the companies established by the government of India. It is a company in which not less than 40% shares are held by the government or RBI. It is a company which is registered under Section 8 of the Companies Act 2013. We will see what we mean by companies registered under Section 8 in the next slide. It is a company having no share capital and it is declared by order of the Central Board of Direct Taxes to be a company in which the public are substantially interested. It is a mutual benefit finance company, that is Nidhi or Mutual Benefit Society. It is a company listed in any recognized stock exchange of India. It is a company wherein at least 50% of the voting power are held by one or more cooperative societies. Widely held company. This is the popular name of a company in which public are substantially interested. All the features from A to G comes under widely held company. Closely held company. This is the popular name of a company in which public are not substantially interested. Example of closely held companies are private companies or closely held companies like Parle Products, Patanjali Ayurved Limited. Indian company. An Indian company means a company formed and registered under the Companies Act 2013. The registered office of the company, corporation, institution, association or body has to be situated in India. Public sector company. It means any corporation established under any central or state act of government or a government company as defined in Section 271 of the Companies Act. All the companies which are listed in the recognized stock exchange in India are public sector companies. Domestic company. Domestic company means an Indian company which has made the prescribed arrangement for declaration and payment within India of the dividend from its income. Domestic company is also an Indian company, but what is the difference between a public sector company and a domestic company is that domestic company declares and makes arrangement for dividends, whereas a public sector may declare or may not declare a dividend from its income. Foreign company. A foreign company is a company which is neither an Indian company nor has made the prescribed arrangement for the declaration and payment of dividends within India. Company registered under Section 8 of Companies Act 2013. It is a company formed to promote art, charity, commerce, religion, or any other useful object. It does not declare dividends and its intention is not to earn profit. Principal officer. Principal officer means secretary, treasurer, manager, or agent of the company. Any person connected with the management or administration of the company or upon whom the assessing officer has served a notice of his intention of treating him as principal officer of the company. Person who has substantial interest in the company. It means a person who is the beneficial owner of equity shares carrying not less than 20% of the voting power. Now we will see rules regarding company's residence. Company is said to be resident in India if in any previous year, if it is an Indian company. Its place of effective management in that year is in India. Place of effective management means where the key management and commercial decisions necessary for the conduct of business as an entity as a whole are in substance made. A company is never not ordinary resident. A company which is not resident according to aforesaid conditions is called a non-resident company. Computation of total income. The total income of a company is computed in the same manner as that of any other SSEs. You need to follow the following procedure. First of all, ascertain the taxable income under each head of income after deducting the losses and allowances brought forward from earlier years. The total of the balances in each head is known as gross total income. Deduct from gross total income the deductions from 80G to 80PA, and the balance left is known as total income. On this total income, tax is charged. Assessment of company. A company is required to pay tax on every rupee of its total income at a flat rate. A company is required to file its return of income under Section 139(1). The principal officer of the company files the return of income on behalf of the company. The due date for filing the return of income by a company is 30th September of the assessment year. Computation of tax. A company is liable to pay income tax on its total income, and the tax rates applicable for the assessment year 1920 are, in case of a domestic company, winnings under Section 115BB 30%, short-term capital gains 15%, long-term capital gains 10%/20%. This 10% is applicable for shares and 20% is applicable for assets. Other income 30%. A special note is there. If total income in the previous year 16-17 does not exceed 250 crore rupees, the tax shall be charged at the rate of 25% instead of 30% for the assessment year 1920. Surcharge 7% on the amount of income tax if total income exceeds 1 crore rupees but does not exceed 10 crore rupees, 12% if total income exceeds 10 crore rupees, and health and education cess on the amount of income tax and surcharge 4%. Minimum alternative tax, Section 115JB. In case of a company, the income tax payable on its total income is less than 18.5% plus surcharge, if any, health and education of its book profit. Such book profit shall be deemed to be total income, and the tax payable on such total income shall be the amount of income tax at the rate of 18.5% plus surcharge, if any, health and education cess of such book profit. Book profit means net profit as per profit and loss account. For the assessment year 1920, surcharge, domestic company, 7% if total income or book profit exceeds 1 crore rupees but does not exceed 10 crore rupees, 12% if total income or book profit exceeds 10 crore rupees, health and education cess 4%. Deductions from gross total income under Section 80G applicable to companies. I have given the deductions here. Deduction are in respect of certain funds and charitable institutions which come under Section 80G. And a special note is there that donation, if it exceeds rupees 2000 with effect from assessment year 18-19, it should be paid in any mode other than cash. Example, payment through check or online payment. The donations are classified as no limit donation and with limit donation. No limit donation, where deduction is allowed at the rate 100%. National Defence Fund, Prime Minister National Relief Fund, Maharashtra Chief Minister Relief Fund, National Blood Transfusion Council, National Children's Fund, Swachh Bharat course set up by central government, National Illness Assistance Fund, National Sports Fund, National Fund for Control of Drug Abuse, some donated by resident SSC to the Clean Ganga Fund set up by the central government. No limit donation, where deduction is allowed at 50%. Jawaharlal Nehru Memorial Fund, Prime Minister Drought Relief Fund, Indira Gandhi Memorial Trust and Rajiv Gandhi Memorial Trust. Now with limit donations, where deduction is allowed 100% of qualifying amount, the qualifying amount of deduction shall not exceed 10% of the gross total income after deducting the following: short-term capital gain, long-term capital gain, deductions under section 80C to 80U. These donations are given to the government or to any local authority, institution or association as may be approved by the central government to be used for the purpose of promoting family planning. Sums paid by a company to the Indian Olympic Association or for sponsorship of sports and games in India. With limit donations, where deduction is allowed at 50% of qualifying amount, the government or any local authority to be used for charitable purpose other than the purpose of promoting family planning, any other fund or any institution which is established in India for charitable purpose, any corporation established by the central government or any state government for promoting interests of the members of a minority community, the sums paid by the SSC in the previous year as donations for the renovation or repair of any temple, mosque, gurudwara, church or any other place which is notified by the central government or any state. Friends, this is the basic of assessment of companies, and you need to be very clear regarding these basic concepts so that when we are going to solve problems, it will become very easy. Thank you. Stay home, stay safe.